Next panel here is all about innovations in finance, and I'm going to bring up the panel right now. So our moderator for this panel is one of our board members and one of the MVPs of helping us get this conference organized today. Ajay Nwosu, CEO of Teqball, co-founder and managing partner of Coact Capital. Welcome to the stage, Ajay. Thank you, sir. Next up, Danny Cortenraede, founder and managing partner of InStudio Ventures. He's a general partner for Lead Capital. And for you soccer fans out there, Danny founded 433 Soccer, arguably the most popular soccer website in the world. Danny, thank you for being here, sir. Yes, absolutely. And then last but certainly not least, Tracey Deforge. Very fortunate to have Tracey with us, founder and CEO of the Players Imapct.
Yeah, cool.
I didn't look over here. Hey, Tracey, thanks for being here. Yeah. And then from Powerhouse Capital, founding partner, Salim, Mitha. Thank you, Salim. Yeah. Mic right there. Okay.
I've got one already.
Everybody's good.
Awesome. So I've got some brilliant minds on stage today, and with all of us here for the next 30 minutes, I sort of want to talk sports finance in general. And we'll get as far as we can just based on the topics and the questions I have here. And I want to start off by addressing what's top of mind and what's top of mainstream media in today's society. Given that, I want to talk private equity. Let me set the stage. We're in the fourth quarter of 2024, and recently the groundbreaking shift has just been announced that the NFL has decided to open its doors to private equity investments as of August 2024. They approved a resolution allowing private equity firms to purchase up to 10% stakes in teams, marking a significant departure from its historically conservative ownership model. And Danny, I'd love to start with you and just kind of get your thoughts on how you view this perspective of PE joining the NFL groups, and then at the same time, what long-term impacts do you see on team valuations?
Yeah, sure. First of all, thank you for having me. Yeah, I think let's take a step back, right? If you look at the sports market, it's currently 500 billion. It will go to 600. We go to more than 800 billion. That's just a sport market in general. I'm running an investment firm, so we're focusing on sports technology, but also investing in clubs and leagues and big data, creating our own ecosystem there. Then you have the sports technology market that's growing. But if you zoom in on the clubs and leagues, you have the European, where I'm from, as you can hear from my accent, living here in the States for the last 5 years. But the NFL, I was just reading this morning also, Tom Brady is looking at the Raiders, right? Looking for a 10% stake. I think there's a big opportunity there for all of us. It's limited, right? So not everyone can jump on those opportunities. That's one, with just the 6-7 who are able to buy a stake there. But I think there's a big opportunity if you look at the business model. We currently are looking mainly on women's sports. That's one where we believe in, where we have already conversations with the WNBA, but also the soccer teams.
Brilliant. And Tracey, Salim, thoughts?
I guess I see it as a way to start, and not to jump the gun, but I think it's going to globalize sports ownership, right? It's truly about, like, if you're letting in private equity, it's just starting the trend of individuals having ownership in these pieces, and there's lots of things that I think that the world is going to start getting smaller and smaller as far as who owns what and where the lines are drawn.
I'll just add a couple of quick things, just drafting off of what Tracey said. It really shows the professionalization of sports, right? Sports used to be this heritage asset, a family asset that was passed on from generation to generation, and now, like a lot of industries, it's just becoming much more professionalized with the introduction of professional capital because of the global trends really around audience that's really making it something that's an asset that can be held by these large financial institutions.
Yeah, given that, in today's world, when it comes to fan base, there's a couple of different reference points I always say that needs to appeal to today's fans, and that's timelessness, relevance, exclusivity. And with that being said, when you look at the NFL holistically as a league, that's something they've created, which is in itself as a moat. And given the team valuations, the average team's now valued at $5.7 billion as of today, up 11% from last year, which is a record. Is that sustainable long term?
I'll start on this side here. It's really interesting. We look at the NFL, and it's the granddaddy of sports leagues in the U.S. And you look at the Super Bowl. 150 million people watch the Super Bowl. But if you look at an English Premier League soccer game, just a regular season match, Liverpool versus Manchester United, it gets 1 billion viewers. So the biggest, best event in the US only draws 150 million versus a regular season match. Now, why is that? It's the global aspect of it. So if you think about how much more runway there is for something like the NFL, that's why you're seeing games in London, Germany, Brazil, because the global market is completely untapped. I lived in London for 12 years, and I was shocked moving as an American over there. These English teams go to China, they go to Asia, they go to Latin America, and they do these tours, and they've been doing it for 3 decades. It's only been in the last 2 to 3 years, other than London, that any of these teams. So to answer your question, Ajay, there's massive opportunity where, again, it used to be, hey, I was the Clippers, or I was the Bears, or I was the Golden State Warriors. I was a local team, but I'm actually a global brand. I'm IP, and that's the runway to go.
Just this morning, was it Roger Goodell was backpedaling on whether or not the Super Bowl would ever be held outside of the United States, because he sees exactly that trajectory of what's going on globally. I had the good fortune of being at the first NFL game that was played in Germany last year.
Yep.
And never in my career have I ever stood for an entire NFL game. These fans were on their feet the entire game. And, jerseys from every, not just the 2 teams that were playing, from every team in the league. It was amazing to see. And they knew every word to Sweet Caroline as well.
No, I agree. I agree to that. Being from Europe and see what's happening. Look, I'm supporting soccer already for many, many years. But the NFL, the big opportunities, as you noticed, Germany, and it was a great success, London. And if you look also how they monetize the games, that's also a big difference. If you look at the American way of the European way, right? With all the breaks and the monetizations and the things that they're selling, I think the people from Europe can learn from that.
Talk to me a bit more about that. When you say how they monetize, what's the kind of the big differences that you've seen?
Just how you, if you already go to a game, I have 2 little boys myself, just joining a game here in the United States and going to an NBA game or an American football game, it's different. So with the breaks and everything, what you can buy in the meantime in Europe, that's just just one example. And the different revenue streams, I think, again, being from the soccer world, they are still quite traditional. With COVID, they needed to fast forward with the whole digital transformation. But there needs to come on much more revenue streams, talking about fan engagement, for example.
Got it. Salim, do you see an expanded footprint for the NFL allowing private equity firms to invest more than 10% in the future? Just curious.
I mean, it's an interesting point. I think they kind of capped that so that there wouldn't be any sort of control elements to it. I think to provide some of the liquidity, et cetera. So, I mean, it's hard to say right now, but I think you still want to maintain some of, while there is a professionalization, I think you want to maintain some of the elements of those local roots, like think globally, act locally, and I think they want to maintain that. That's
absolutely. So I want to dive into another topic and double click into this, which is women's sports, which has been, again, another mainstream topic in the media. Given, obviously, the world of women's sports has grown as an asset class, and sports in general has grown as an asset class, this topic has become more of a forefront with soaring viewerships. driving team valuations, attracting increased investments, whether it's the NWSL, WNBA, women's volleyball, women's hockey, women's tennis, etc. Given that, can you share a bit more on what's driving this trend and the investment opportunities being created? And Tracey, I'll start with you.
What I think is driving the opportunity is not that we've just taken soccer and made it pink, right? Is I think that we're really starting to, these leagues that are coming forward, and the WNBA has been doing it for a really long time, so they're showing a lot of success. But I think the unique thinking is, how do we make this a league for women and women viewership and beyond? And I think that's where we're going to start to see some of the nuances to the opportunities. It's not just a traditional stick a male sport structure on it and make it go. So I think there's a lot to uncover there.
Agreed.
Yeah, so we are looking at different things in women's sports. It's one of our pillars in the fund. WNBA, talking with them, with the legal team, and had a chat with the commissioner about the whole league and everything what's happening. It's obviously in a big, there's a hype, it's going great, but also they're looking for capital partners who have a long-term vision, right? Because we're not there yet. It's still a big difference, so we need to put in a lot of time, effort, and money to achieve that level. NWSL, we also looked at a couple teams there, Portland Thorns, for example. If you look at the viewership, since 2019, it went up with 500%, so that's great. Yeah. That's Chicken Egg story, so there is much more corporate sponsorships coming in, so that's great that you see that evaluation. The Angel City FC, right, just with Bob Iger, who bought it for an amazing valuation for almost 250 million. Yeah, so I think there it's in a great position, and still a lot of work to do.
Amazing. Salim?
Yeah, I mean, I just wanted to add, I think some of the interesting things about women's sports, we sort of look at it, there are 168 hours in a week. And so your favorite team may only play 3 hours that week. So how do you, that under 165 hours, times globalization, there's certain sports you occupy and that you want to know about. I think one of the things about women's sports that's really interesting is, let's take NCAA basketball. Most male players are one and done. And it used to be a time back, Christian Laettner, Grant Hill, you got 4 years to see them. And they built up a fan base, so when they went into the professional league, they had followers. And so this has sort of been something that women's sports really has. Between women's soccer, which is the #1 soccer team in the world, it's like, hey, we have Brazil here, right? Yeah. And then people like Caitlin Clark or Angel Reese, who had 3, 4, 5 years to build that fan base up. So I think what you're seeing is, it's not just, hey, it's women, it's these structural things that make sports popular, that fill that 168 hours a week, where you kind of figure out, hey, what's going on between games, rivalries, et cetera. We're getting that infrastructure now. The last thing I'll say about that, last week, through Powerhouse, we were the largest investor in a company called The Athletic. Sold it to the New York Times. Just last week, announced with Yahoo, we're launching a women's sports hub. So you're starting to see this, right? How do you fill that fandom, those stories, et cetera, that make the games, those narratives that make the game that much more interesting?
Absolutely.
And the personal stories behind those women, 100%. Right? That's the bigger draw.
Right, exactly.
Yeah. And obviously, recently we've seen the WNBA renegotiate their media broadcast deal. We've seen the NWSL announce a record media broadcast deal. My question is, have we hit the apex here, or are we just in the first inning? And how have these impacted team valuations?
I think we're in like the second inning.
Yeah?
Maybe, yeah. Okay. There's still a lot of greenfield left to go. I think that's part of the tweaking and the figuring it out and understanding where the viewership is going to come from with a very competitive, like, you're not just competing with the big four sports anymore, right? It's all of these emerging leagues and things that are coming, and the OTT channels, and just fighting for people's attention in general is difficult. But so I think that there's a lot more room to grow.
Yeah, I agree to that. Look, I think the last media deal, NBA, was at 76 billion, so it's an insane amount. But with the big tech companies coming in, and it changed, right? I was watching a soccer game just for 90 minutes. I have two little boys; they just watch the highlights and still doing something at the same time. I don't get it, but that's how it works currently.
Yeah.
There's just another way of how to consume content, and with the smart stadiums coming up, the things that are happening there, and more personalized data, and that also can go into how you consume content. I think there's so much more opportunity in the next coming years. So yeah, there's much more to come.
If I were to just kind of draft on that, on the data side, well, the interesting thing now is before you could only watch sports on the big three, ABC, CBS, NBC. Now you've got, and cable, but now you've got the tech companies, right? I think earlier that panel was talking about everyone from Netflix to Peacock, et cetera. So it's not just the NFL, English Premier League, it's mass, but it's really, I think to what you were just talking about, the data, it's the riches and the niches. So it's who is watching your sport. So the data, you know, the example we give is if Netflix knows everyone who watched their show, we were talking with the San Francisco 49ers, before COVID, they, in their premium seats where people have season tickets, they could only track 25% of the people coming into the audience. So they didn't know their customer. Now, if you know someone's a fan of the NWSL, et cetera, you can target to them, you can personalize to them, and that's how you can grow the audience, by actually knowing who your fans are instead of it being a faceless person walking into your stadium.
Absolutely. No, you're spot on there. And given that, that's a great dovetail. I want to talk about sort of the fan engagement portion of things. I mean, given the astronomical team and league valuations we're seeing in today's world and landscape, teams are becoming more like culture and media companies versus just teams in the way they interact with their fans. And they're meeting the fans where they're at whilst building an all-inclusive community at scale. And given that, I guess as we look into the here and now and then the zeitgeist of the next frontier, what are some of the innovative approaches to fan engagement you've seen, and how are fans influencing sports finance?
Yeah, I was just talking about a couple numbers, right? The 500 billion going to 800 billion. If you look at the sports technology market, 2021 it was around 13 billion, 2022 30, this year hopefully 40, but it will go to 103 billion in 2030. 43 of those investments are going into fan engagement. So that's a big number, right? So that's also what we are looking at an investment firm to, okay, what kind of things are now groundbreaking and can change actually how we can communicate with those fans. We're looking at different kind of things like smart stadiums, like we're sitting here in this amazing stadium today. I was just in Madrid at the Real Madrid stadium, everything what's happening there in terms of fan engagement, or the SoFi stadium, 5.2 billion stadium. It's insane if you're sitting there, right? Everything what's happening and how you now can engage with your fans. Yeah, that's something where we're looking at right now.
Yeah.
And you're starting to, you already see a fan-engaged football league, right? Where on the blockchain, you're able to have all these team ownerships, team decisions. That's real engagement beyond just the stadium visits and the merchandise. And then you look at fintech platforms like Republic that are allowing fans to invest in teams. And then you have companies that are emerging now that are allowing fans to invest in players and their contracts. And what does that look like? So I think the engagement tools are just off the charts right now as far as what's going to be available in the next few years.
Yeah, I would say the key trends we look at to engage fans. Well, first of all, the worst thing that could happen is your fans keep getting older and you don't replace them and get younger fans. So where are the young fans? Okay, so you see youth sports. When you watch NFL, you're going to see the NFL flag all the time. So it's getting in and getting that younger generation. But then the other place where they're at is social. Interestingly, I think the NFL, as we talked about, the granddaddy, only last year finally produced, they let the players take clips of their games in their play and put it on social, because everyone's on TikTok, YouTube Shorts, etc. So you're seeing that's the big element of it. And then the second is, talk about the shoulder content. Everyone knows about Formula One, Drive to Survive.
Yeah. That
was huge. Now you're seeing the NFL do that with quarterback, receiver, et cetera. NFL has a deal with Skydance. One of the things we did was with the PGA Tour, there's a show called Full Swing on Netflix that we own, and We're doing a bunch of things on YouTube with creators around a golf tournament. So it's about being on social. It's about the shoulder content. Again, it's the 168 hours in a week. It's not just a game, but how are you getting to the youth and how are you creating content that engages them and keeps the mind share with your fans?
Yeah. And just to add to that, I'd say sports as an asset is obviously recession-proof. It penetrates psycho and demos, and it creates a great memory dividend long-term, right, depending on which team you support. And so, Danny, I recently read a quote that said all of the big sports teams and leagues are looking for new revenue streams. And so that's where we come in as an innovation hub to help grow them. That someone I read was you. I'd like to double click into this in terms of your investment strategies and what benchmarks you guys look for at InStudio Ventures.
Yeah, so we just launched our second fund. We started with a first fund that was 75 million, investing mainly in early stage companies to get them from 0 to Series A in the best possible way. Average check size 2.5 million. Sports technology, that was one of our main pillars there. So we invested in esports, NHL, different kind of companies. We're not a traditional VC. We are much more actually just hands-on entrepreneurs. I'm an entrepreneur myself, just build companies and sold companies, also the GPs in our fund. And we hired actually expertise from the VC industry. And then fan engagement, one of the main pillars. We just launched that second fund. That's sports technology in clubs and leagues. And big data, that's what we're creating there, our own ecosystem, and helping those clubs and leagues to create more revenue streams. Yeah? This is what I mentioned, working in the soccer for so many years, very traditional, leaning a lot on that media rights. And during COVID, we saw, okay, that's not enough, so how can we create there more revenue streams? And that's just one of the things that we did with clubs in Europe.
You've also got some athletes as LPs, am I right?
Yeah.
Yeah?
Yeah, quite a lot. So players who playing for Liverpool, Dortmund, Real Madrid, NBA players, NFL players. So quite a bunch.
Amazing. Tracey, on that point regarding athletes, I want to kind of dovetail into you. Just as far as your investment strategy, and one of the quotes I pulled for you, the internet's an amazing place, right? Was what we're doing is a little bit different in really bringing the athlete to the startups in a new way that is more angel investing style. The athletes are making the decisions themselves. They're not putting money in the hands of fund managers anymore. They're getting educated on how to evaluate opportunities and making decisions on their own. Given that shift in NIL rules, more athletes investing in sports leagues and teams, how's the role of the athlete specifically impacted team valuations and the way you look at deals?
Wow, that was a big segue. So part of what we do at the Players Impact is really about empowering the athlete to make their decisions, to be part of the conversations. And so when you look at the athletes or the Players Impact, when we're investing in anything, whether it's venture or sports teams, it's really thinking about what value are they driving as strategic investors. Because, and you probably know this, but they're not just dumb money. They can be a whole lot more than that if they're empowered to do such and not just be a figurehead. At the Players Impact, we don't focus on the 1%ers. We're really about democratizing the access and opportunity for the 99%ers. So although you may not know the name of that, Olympic skier from, 4 years ago, they can make an impact in different opportunities and we bring them to. So I think that it might not play a role in the valuations of the investments that we're making, but we definitely come in as strategic investors.
Got it. On average, how many deals do you guys do a year?
Except for some bad years like last year, we're probably 12, 14 a year. Okay. And again, we're coming in at we're allowing our athletes to come in at smaller check sizes because what we don't want them to do, right? We're staying away from all the bankruptcy conversations. We're trying to de-risk opportunities for them. So we're as individuals, they're coming in at smaller check sizes, but in an aggregate, we're coming in at big check sizes. So yeah, I'd say our sweet spot's 250 to 500 cool. At the tail end.
Got it. And Just to add to that, I think the athlete in today's world is obviously becoming a lot more smarter from an investment thesis perspective. And I've always said that money monetizes well if you invest once, and knowledge monetizes forever. And from that degree of understanding, if I look back 5 years ago, the word EBITDA was not really understood by some athletes. But in today's world, they understand it to a large degree based on surrounding themselves with the right people. Salim, I want to kind of dive into your investment thesis just for Powerhouse Capital and how you guys look at deals and underwrite deals.
Yeah, no, good question. And the reason I say that is we specifically focused on tech-driven media, entertainment, sports, gaming. And we started within the walls of CAA, Creative Artist Agency, the big agency business, and people were like, great, my friend is making a movie, do you want to invest? And we're like, no, we don't do content, binary, either opens at the box office or it doesn't. We look for three things. We look for platforms that are data-driven and direct-to-consumer or direct-to-community. And platforms are things that have network effects. So I mentioned The Athletic before, another one of our investments, Masterclass. The more instructors, the more writers, the more teams that are on there, you get this network effect where it's more valuable. So that's the platforms. Data-driven is about personalization at scale. We talked about data. So you open the front page of the New York Times, it's the same for everybody. You open your Netflix or your Athletic or your Calm mindfulness meditation app, it's personalized to you. So that's the data-driven. And the last point, we talk about direct-to-community. It's about the KYC, knowing your customer. We talk about, any of these traditional media companies or the sports teams I talked about don't know who their customer is. So if you can pull that together, and technology helps that, where you can create network effects, personalize at scale, and really understand your end customer, that's what we look for in investments, and that's what tech-driven media, as we see it, is all about.
Yeah. Data is currency in today's world. And I think from that degree, based on the lens you're looking at it through, allows the academia collected, allows you to deploy more scholastic approach as you move forward. Just a couple more questions, or at least one more question from my side. What future predictions on the evolution of sports finance do you guys see in the delta of sort of the next 10 years based on the current trajectory of where we are now?
You first, Danny.
Yeah, look, we have a clear thesis for our fund, right? So I can speak from that perspective.
Yep.
So for us, with the latest fund that we launched, it's really about sports technology. We believe in this market. We're still early stage. We believe there's so much more opportunity from that perspective. The clubs and the leagues, what we discussed, that's something where we're focusing on, and then combined with big data, that's where we almost create our own ecosystem. So for me, that are the main pillars. And then just go a little bit deeper, it's youth sports and women's sports, where we believe in there's a lot of opportunity, and we're also putting our money into, and not only the money, but also strategic value.
Got it.
In tech, you always look for fully integrated, right? That's going to be your winner. And I think these sports platforms, the more that they're all-encompassing, team owners are owning more than one team. They're owning the women's team. They're owning the academies in the youth sports team. I think those fully integrated ones are going to be the trend for aggregation of assets.
Well, Ajay, you've asked excellent questions. You've hit all of them. I mean, the globalization thing to us is huge. No matter what language you speak, if you're a fan of Ronaldo or Lady Gaga, you're a fan. It's something in that regard. But I would say the one thing that I could add to it is we look a lot at what's the biggest and fastest growing sector of media and entertainment? It's actually mobile gaming. So there's so many interesting things you can learn from mobile gaming, like if anyone plays Candy Crush or any of these other things, which is there's elements where the more you play and the more value is added to you, your willingness to pay increases. And so it's the same thing. You see Netflix adding an ad tier, or you're selling just merchandise. I want to buy the latest jersey, or I want to stream the latest game, or I want to get back in the locker room interviews. So I think looking at how mobile gaming continues to scale, I think there's a lot of lessons that can be learned about how do we monetize fandom. And so I think that's another big element on a global scale.
That's an interesting take, and that's a unique one for sure. Absolutely. Given that, I think we are just on time. So I just want you guys to give it a huge round of applause for our panelists here. I think it's been an unbelievable discussion.